All right, for more on what a higher capital gains tax could mean for the market, let's bring in Jack Ablin, founding partner, chief investment officer with Crescent Capital. Doug Sandler is head of global strategy with Riverfront Investment Group. Jack Ablin, there's some, I guess, confusion here in this room about whether this is something new or something you smart guys all knew about all along. What is it?
It's a little of both. We heard about a Biden capital gains tax increase during the campaign trail, so that was nothing new. And he did want to align it closer to current income tax. So he wanted to put investing and labor on equal footing when it came to tax rates. But what is new, at least in my mind, what's new is the original plan was to tax anything a capital gain in excess of $1 million, which would be a smaller subset of investors versus taxing capital gains for anyone who earns more than $1 million, whether you're taking a $10,000 capital gain or a $10 million capital gain. That is different, and I think it's casting a wider net. And that's part of the reason why we're seeing that sell-off.
So the distinction, as you see it, is between an individual or a family that earns more than $1 million in adjusted gross income and a capital gain that is more than $1 million, which would be obviously a fairly small subset for the general population, I suppose, of that. Doug, let's get your reaction here. Is this something that sounds really like new news to you, or is it something you... Oh, I guess we've just lost Doug. So, Jack, I'm coming right back to you. As you look at the tax system, I don't mean to inject my own opinion here, but I'm going to anyway. I think there's a strong argument to be made that all income should be treated as income, period. And if you did that, you would reduce. You could still have a graduated income tax, but that there would be no distinctions between capital income and labor income and carried interest income and dividend income and all of that. And the result of that would be that you could lower the overall marginal rates significantly. True?
Yeah, you probably could. Absolutely. If you put everything on a level playing field, and made it simpler, you probably could lower the marginal rate. Mm-hmm. I think the reason why capital gains tax was generally advantaged was because we really do want to encourage entrepreneurship and business formation, because at the end of the day, that's where the jobs come from. So I can understand the other side of the argument. Mm-hmm. If you're going to stick your neck out and start a business, then any benefit that you ultimately get should maybe be at a better tax rate than, say, sitting at home and clipping coupons on bonds.
Yeah. Shepard Smith here. Thanks for watching CNBC on YouTube.